This is Daybreak Asia. We're counting down to Asia's major market opens. Looking like a pretty good setup so far this Friday. We're getting a pretty good lead from Wall Street. The data from Japan has been quite interesting this morning. And of course, a drumbeat to the Bank of Japan and building these expectations continues.
Yeah, that was a real mixed bag, wasn't it? I mean, balance of payments better than expected. Household spending was a real letdown, and the backdrop to it all, a stronger yen as well. But I guess the big event we're counting down to this half hour, State of the Union.
Yeah.
Is always going to be entertaining.
That's right. The geopolitical risk keeps building and the focus is going to be back on the US. And of course, the Fed has really given some comfort when it comes to investors this week. But we're watching out for some of the key themes coming out of President Biden's address, really being seen as a campaign State of the Union, right? The last big chance in terms of being able to address the nation before the November election, which is looking like being set up between him and Donald Trump. A rerun, if you will. Take a look at the start of trading in Tokyo. The Nikkei 225 off to a good start, about 0.5% higher there. We have really seen a number of markets around the region really outperforming, including Australia. Of course, we'll get to that in just a moment. The topics is looking unchanged, but still seeing some incremental gains there. Dollar yen, that strength has been quite interesting, obviously on the back of these expectations that perhaps a lift-off from the Bank of Japan will come sooner rather than later. For the impact when it comes to the Japan equity rally, it's been surprisingly sort of a non-event. 147.89 is how we're trading when it comes to dollar yen at the moment. And we've really seen kind of any attempts at turning short on Japanese stocks becoming increasingly risky. These shares of these so-called low-quality companies have really seen quite a lot of volatility on this sort of corporate governance reform program that has driven so much of the optimism towards Japanese equities. Dollar yen there, in terms of FX, we're not seeing too much of a move when it comes to the dollar, but watching that, of course, on the back of that sort of political risk aspect as well. Taking a look at Korea, we have seen, of course, the Kospi and the Kosdaq really kind of seeing a lot of foreign buy interest, again, on sort of similar optimism that perhaps the value up program can be successful and can kind of elevate and deal with the Korea discount in the same way that we've seen it successfully done over the past few months or so in Japan. We're seeing a lot of the chip stocks are in focus today. We're seeing upside of about 1% when trading in Seoul there. The Kosdaq up by 0.8%, but chips in focus, of course, as we continue to really see this to and fro from Beijing and Washington on President Biden wanting to really accelerate these curbs, Paul, on advanced tech.
Well, let's take a look at how we're doing in Australia an hour after the open here. Information technology stocks are doing pretty well here. We've got the broader index up by better than 0.5%. The gains are fairly broad-based. We've got almost every sector pushing higher. Financials doing well also. The materials sector kind of flat at the moment. Although that said, we've got some of the lithium names among the biggest gainers today. Not a huge amount of movement for the Aussie 10-year. They're at just a whisker above 4%. The Aussie dollar's been showing a little bit of strength recently. And crude prices up as well. We do have a segment of the Keystone Pipeline between Canada and the US partially shut, which is helping to support the oil price there. Now, we're also keeping an eye on US Treasuries, of course. Two major central banks signalling that interest rate cuts are on the way. Fed Chair Jerome Powell telling the Senate Banking Committee that policymakers are getting close to having the confidence that they need to start easing.
I think we're in the right place, which is we're waiting to become more confident that inflation is moving sustainably at 2%. When we do get that confidence, and we're not far from it, it'll be appropriate to begin to dial back the level of restriction so that we don't, drive the economy into recession rather than normalizing policy as the economy gets back to normal.
Well, the next guest favours bonds for investment, says we're entering a golden age for fixed income. Jessica Jones is head of Asia at PGIM Investments, joining us now in the Hong Kong studio. And Jessica, as we get going for trading in US debt, we do have the 10-year yield moving a little bit higher. How do you allocate for bonds in 2024?
Absolutely. Well, thank you so much for having me on the show today. And by the way, happy International Women's Day. Yes, you make a really good point, and we believe 2024 is absolutely going to be a time for active investment across public and private markets. As we see Asian investors look to allocate between what they see as market risks and challenging times, but also how they position for the recovery that we know is coming. From a traditional asset point of view, bond markets, absolutely, we think that we're now entering a golden age for fixed income. We see Asian investors cautiously start moving into fixed income in the form of high-quality investment-grade securities, as well as income-focused fixed income funds. And from a growth equity perspective, from a global equity perspective, we're seeing real tailwinds for growth stocks. And we see that, as investor confidence improves later on this year, we think that clients are going to want to keep allocating to these companies and these sectors within equities that will give you exposure to some of these structural growth stories like AI, global consumer goods, and other innovations in the healthcare sector. I think the biggest thing from an asset allocation point of view that we're seeing from Asian investors is this big move to private markets and alternatives. This is big in the space, and happy to talk about that.
Yeah, let's get on to that in a moment. I just want to get your views firstly on Japanese government bonds and how that fits into your thesis, because of course we've got the BOJ looking at ending negative rates, and I guess the obvious follow-on question from that is, do they look to exit the bond market?
Look, I think that that's an interesting point, and we just keep we do see clients looking at Japan both from a fixed income and equity allocation. As you mentioned, there's a lot of interest in that space, but we really see that there's more of a move across the assets, across the geographies, and across fixed income. So we're seeing and we're advocating for a much more of a diversified portfolio.
Jessica, I do want to get your views on private alternatives and private investing options that you see as gaining traction at the moment.
Yes, so this is, as I mentioned, a huge area for high net worth investors. A lot of research suggests that this is a $1.5 trillion opportunity for high net worth investors who are really under-allocated to alternatives and private markets. If you think about it, the global AUM is something like $285 trillion, and high net worth investors own about 50% of that global AUM, but they only allocated about 16% to alternative investments. When I speak to some of the big the alternative gatekeepers of the private banks here in Asia, they all reinforce that clients here are maybe allocated low single digits to alternatives and private markets, but they're really looking to grow that. And the CIOs and the house views of some of the banks out here is really suggesting 15 to 30% allocations, depending on the risk tolerance of the client. So we're seeing a really move in that direction, and some interesting ideas and themes that we're seeing in the space, especially is the digital infrastructure theme. A lot of interest from clients to allocate to something different, like global data centers, for instance.
How dramatic do you expect the real estate market recovery or continued growth to be this year, given there are expectations for the rate environment to be pretty drastically different by the time we get to the end of the year?
Yeah, I think from a real estate perspective, there's a big structural case still to have real estate allocations in your portfolio, and this is what we're hearing from investors in Asia. I think particularly Asia Pacific real estate, given where we are in the interest rate cycle and the inflation ease, Asia Pacific real estate has had a much better recovery, and we see that after 2022 there's been a great reset, and this may be the year that real estate comes back. I think it's also about the different sectors and themes and global structural trends that we see within real estate, specifically on this digitalization theme in terms of data centers as a sector that our real estate team like all across the world, in the US, Asia, and parts of Europe. I think this idea of AI, of digitalization, is creating such a huge amount of data creation, and there's not enough storage for this data. So this is simply a very interesting supply and demand imbalance thesis of a scale and geographical breadth and magnitude that our portfolio managers have never seen before. So a very exciting area, and it's why we're trying to think about more investment choices and options for clients in the space.
Jessica, I just want to know how you approach China as well, particularly around that fixed income space, because we've got a chart here on the Bloomberg terminal that shows how yields have been slipping. Is this a trend that you expect to continue?
So China is a very, China is an interesting area. We've obviously had a very fascinating week this week with China. As we speak to clients about China, there is, no doubt that this is still a very important market. I mean, there's a near-term, let's wait and see with China when we hear from clients. But at the end of the day, China is a home market here, and people are thinking more longer term of how they allocate to China. And so, we keep hearing, like, when is the right time to come back, and really looking at the market very carefully for China.
All right, Jessica Jones, head of Asia at PGIM Investments. Thanks so much for joining us. Still to come, China's foreign minister blasting the US for imposing what he calls a bewildering level of trade curbs. We get analysis with the Stimson Center on the superpower struggle to be top in tech. First, though, China's latest price data set to show an exit from consumer deflation, but a 17th straight decline at the factory gate. We'll have a preview next. This is Bloomberg.
China is releasing February inflation data on Saturday. Bloomberg Economics thinking that CPI will probably rise out of deflation for the first time in 5 months, but that may not signal yet a fundamental recovery in demand. Let's bring our China economy editor, Jill Desis, who joins us in Hong Kong. So there were a lot of concerns about a deflationary downward spiral in confidence, right? And these data points take on special significance given that ambitious growth target. What are the expectations here?
Yes, they do, Heidi. And look, I think that the issue with this February data, of course, is that it captures this period during this extended Lunar New Year holiday. So I think Bloomberg Economics' argument there is that a lot of this is going to be, sort of elevated by the fact that people were spending a bit more over the holiday. We saw that in some of that earlier data, even if they weren't spending more on an individual basis, that probably contributed to an uptick in food prices. So that's why you might see that CPI gauge creep out of negative territory for the first time in 5 months. Of course, even in doing that, I think, BE is saying somewhere around 0.1% or so. You've got a broader economic consensus of maybe 0.3%. I mean, these are really, really, really still close to that deflationary line. So I think it's safe to say here that these deflationary pressures are continuing in China, and we're not really seeing too much in the way of what it would mean to chart a meaningful turnaround for that yet. We still need to see a lot more in terms of measures to sort of help boost consumption before you actually see something that, sort of erases a lot of those concerns around deflation right now.
Yeah, so in terms of a policy response, do we anticipate any? And at what point do we start staring down Japan-style deflation?
Well, I think that's a big question that's, obviously been in debate quite a bit over the last year, whether China's headed for this prolonged period of stagnation in the way that Japan has, Japanification. Look, right now we're still in the middle of this National People's Congress, massive political gathering in China. And so far, I think a lot of analysts, investors haven't been incredibly, they've been a bit underwhelmed by a lot of the policies that they've seen so far. A lot of things that have felt a bit vague. There hasn't been a whole lot of the way in the way of incredibly specific targeted measures that have, impacted consumption. As we've been talking about, we've got this GDP target of around 5% set for 2024. That's pretty ambitious, all things considered, just because, the base of comparison for 2023 isn't as favorable as it was last year. So I think, we're still, a lot of analysts are still looking for, is there going to be additional fiscal stimulus, or are there going to be other sort of consumption-led measures to really kind of get things going again and restoring, confidence in this economy?
And we're also looking at the idea of fiscal restraint, particularly when it comes to some of these heavily indebted provinces and regions, right? We ran a story this morning saying that some of these local governments have ramped up asset sales to try and pay down debt and find new revenue streams. Do we know what things are like at that local level? Because they have typically kind of, been a pretty key part in being able to generate numbers towards that GDP target.
Yes, Heidi, I think that this is a really interesting trend. So essentially what we're reporting is that a lot of these local governments, they're looking at, yes, alternative revenue streams, because a key revenue stream that they've really relied on for many years, this idea of, making money by selling land, has obviously, really struggled over the past couple of years because of the property crisis. It's really impacted their ability to do that. So instead what they're doing is they're looking at selling some of their assets in order to pay down their debts. We've seen some provinces look at selling former Olympic centers or arts and cultural centers, that kind of thing. I will say that, while, that does go part of the way toward making up for some of this hole that's been left by the evaporation of these other, once reliable revenue streams, it's still it doesn't completely make up for it. I mean, the income that local governments were getting by selling land was really, really massive. And so there's probably more that they need to do. But yes, I think that is, sort of part of that piecemeal effort to try to turn things around. We're also seeing, I would just point out, the central government take a larger role in selling debt to sort of help alleviate some of those local debt burdens. That is probably one of the bigger stimulus announcements we got out of the MPC so far, was this announcement that they were going to be selling like sovereign debt and everything like that. So we'll see where that goes.
All right, China economy editor Jill Desis in Hong Kong. Now, a key player in China's energy transition says electric vehicles and LNG trucking will replace about 20 million tonnes of gasoline and diesel consumption this year. Lu Ruqian heads the Economics and Technology Research Institute of the China National Petroleum Corporation, and he told us exclusively how China can balance its economic growth goals with a green agenda.
5% of the economic growth is a new normal situation in China. In recently, a couple of years, that is, we think is still a normal speed for China's growth. However, on the oil and gas sector and from perspective of oil consumption, last year our country's oil consumption increased by 11%. That is very high. So that is, of course, the recovery from the COVID-19. And this year, because of the energy transition, the booming up of the electrical vehicles, and especially for the gasoline transportation, according to our research and study, our prediction is about 1% increasement about the gasoline increase because of the EV and because of the economy.
The transition, yes, but that number, 1% growth, basically from what I look at your research, that would be the lowest increase from your research in at least a decade. Is that a concern, or is that just a reflection of that energy transition? Does it represent that the economy does not have end demand, or is it more because there is a energy transition, at least in the new energy vehicles?
I think because of more of the energy transition from the, let's say, from traditional fossil fuel to EV, that is, will reduce at least 20 million tons of crude oil at least every year, year by year. So that is a huge number.
So through this energy transition, is this going to be the long-term trend of very low single-digit oil demand growth?
In the long run, of course, we have entered the era of low growth rate of the crude oil, and especially the gasoline, because of the transportation usage volume should be replaced by the electrical vehicles and other areas.
Can China have a shale revolution? Some have called it an Oriental shale revolution. Or is the coal bed methane too deep? Are there structural problems that cannot happen? What do you think?
China now is the second largest shale production behind the United States. Of course, from the perspective of volume, we still a very small one. China, we still have a dream of shale revolution, just like the United States, similar as the United States, because it's symbolizes the technology innovation, the business model innovation, and actually in Southeast China, in Xinan, in Sichuan province, no matter Sinopec or CNPC, actually we do our utmost to product and exploration for the shale, the coal-based methane or yeah. We still have this kind of dream. We call it a new shale revolution in China.
CNPC Economics and Technology Research Institute President Liu Ruqian there, speaking exclusively to Bloomberg's Stephen Engel in Beijing. Plenty more to come on Daybreak Asia. This is Bloomberg. President Biden is expected to make his 2024 re-election pitch during his State of the Union address in just a few hours. The speech will also offer clues to Biden's legislative priorities if he wins a second term in November. Bloomberg's political news director Jody Schneider is with us now. So, Jody, this one's going to be particularly important for President Biden. Last one before the 2024 general election, of course. What are we expecting to hear today?
Yeah, so Paul, we're expecting to hear more than a typical State of the Union speech, which is often a list of priorities and themes that the president wants to accomplish, looking back on some achievements. Tonight, we expect to hear from President Biden about why he should get another 4 years in this job after November. And he won't do that as a campaign speech per se, but it will have many elements of that. He will be casting himself as somebody who Americans can trust. He will be trying to really deflect the question of his age at 81. He is the oldest president and certainly will be for a second term, obviously. But he wants to deflect that issue by pointing to Donald Trump as a danger. He may not mention Donald Trump's name much, but in excerpts we've seen of the speech, he casts himself as someone who cares about fairness and decency and the American dream, posing that, saying others seem to want more, to be focused more on retribution and recriminations. He is clearly pointing to Donald Trump with that. The other thing he has to do tonight is to seem vigorous, to basically say to people, you can trust me. You can trust me to do this job, even though I am the oldest sitting president. That he can be, that there won't be any flubs, that there is not any mental frailty at all. Americans in polls increasingly say they are concerned about his age. And they also say they're concerned about Donald Trump and that he could be a danger to democratic institutions.
We know that he'll be talking about some of his achievements, but do we expect any new announcements?
Yeah, we will. So the one thing that we know about already, and we have people familiar have told us this, that he will talk about, he will give support for Israel, but he will also say that the U.S. is looking to set up essentially a port on at the seaport at Gaza to get emergency aid in to try to stem that growing humanitarian crisis where millions of people live and are having trouble getting food, water, and medicine. This pier essentially would be able to do that. They wouldn't be able to erect it overnight. It will take some weeks, but he will talk about that as a way to try to quell criticism about the U.S. Supporting the continued war, the Israel-Hamas war, even as that humanitarian crisis in Gaza grows. So he's going to try to do that in the speech. He will talk about some things. He will talk about changing the tax code to tax corporations higher.
Bloomberg's Jody Schneider there ahead of the State of the Union. We'll be bringing you that full address from President Biden a little bit later on. Our special coverage begins at 12:30 p.m. here in Sydney, 9:30 if you're watching in Hong Kong, 8:30 in the evening in New York.
All right, let's take a look at how we're tracking on markets across the Asia-Pacific. Looks like we're going to have a positive day to close out the week. The Nikkei only just in positive territory, but reclaiming some of the losses that we saw on Thursday. Here in Australia, we're performing pretty well, better by 0.75%, and they rally pretty broad-based as well. Most sectors in the green. The Kospi better by 1.3% at the moment. We are keeping an eye on industrial and energy stocks today. A couple of stories making news at the moment. The head of the Los Angeles port is saying that Chinese says cranes are posing a security risk, saying Gene Soroka saying they're collecting data, they're looking at information, doing something about it could be a problem though. Not too many countries build giant cranes suitable for container terminals. Elsewhere, we're also reporting that China's oil demand is set to enter a low growth phase. This is according to Lu Ruqian, the head of the CMPC Economics and Technology Research Institute that we've been reporting on this morning. So China's oil demand seen entering a low growth phase. Never mind that, we're still seeing pretty decent gains for some of those industrial and energy stocks, Heidi.
And of course, staying on China, Paul, the foreign minister has blasted the US for imposing what he calls a bewildering level of trade curbs as Washington tries to block Beijing from advanced tech. Let's take a better look at this with Yun Sun, who's the senior fellow and director of the China program at the Stimson Center. The response from Beijing, unsurprising, pretty much in line with what we kind of see in terms of a reaction to these announcements from the US. How elevated are political risks between the two sides in this election year, given that throughout the Biden presidency, the tone at least has been pretty well maintained as stable?
Well, I think we're at an interesting moment. We're having a domestic election here in the United States later this year, which means that the administration is trying to maintain a certain posture on China without triggering any major crisis that could jeopardize the election later this year. So we have seen some stabilization and a lot of efforts from both capitals to stabilize this relationship since the San Francisco summit last November. I would say that momentum is still going. But at the same time, we're also hearing some tough talks and harsh rhetoric coming from senior officials on both sides. And Wang Yi's comment yesterday is one of those examples.
It's interesting because we know that China is battling its own domestic macro challenges, right? How much bandwidth does Xi have when it comes to dealing with some of the geopolitical ambitions that China has? We know that defense spending has gone up again. We know that they're pouring more R&D into high tech and AI and chips. Is this as much of a priority as they try and get some of the domestic economic challenges under control?
If you look at Xi Jinping's elaboration on the relationship between security and development, it's very clear that he wants to keep both games going. But with China's economic slowdown, especially the growth rate last year was much under the expectations starting from the beginning of the year. They were expecting so much more from 2023, and it simply did not deliver. So I would say that in terms of the priority, a sense of prioritization in Beijing is certainly focused on domestic economy, the corruption issue, the personnel reshuffling that we have seen in the second half of 2023, which means that poking around in its foreign relations and be particularly belligerent and poking its neighbors and the United States is probably not very high on the priority list for the Chinese government this year.
Just in terms of some of the rhetoric we've been hearing from the Foreign Minister Wang Yi, he calls the US trade curbs as bewildering levels of unfathomable absurdity, which sounds a bit like the title of a Dave Eggers novel. Are these sorts of statements necessarily correct? And he also says the US is going to eventually harm itself with these policies. Does he have a point there?
Well, whether it is correct, whether it is true, depends on where you sit. So if you're in Beijing, you certainly believe it is true. But I think from the U.S. perspective, there is a layer of consideration to maintain a certain advantage or certain edge over China in terms of technological development. So I think sitting from Washington, its policy also has a great point and has a lot of merits. This policy is not without debate. I think there are criticisms even domestically here in the U.S. about this policy, basically saying that this policy is helping China to develop its own capability, that you cannot strangle China or starve China of the high tech, for example, certain dimensions of the semiconductor chips forever. When you cut them off of their supply, when you're choking them, of course they're going to develop their own technology, and you are not going to be able to choke them forever. So you're actually facilitating and expediting the Chinese own development of technologies. So I think both arguments have their own merits. It depends on which one you prioritize.
Well, in terms of not being able to choke them forever, we are staring down the barrel of a potential second Trump presidency at the end of the year. How would that change the picture?
I think people are expecting a lot of volatility if there is a second Trump term. I think the sense is that eventually Trump will want to negotiate, especially on trade, right? He's all about the art of the deal. But before that happens, I think Trump will try to exercise his maximum pressure on China to use certain leverage, well, basically to create leverage for U.S. Negotiation position, push China into a corner, and we are going to see China trying to retaliate. So a lot of volatility is expected, if that is indeed what the November election renders.
If we see a retreat of US support for Ukraine, for example, do you think that emboldens Beijing on how it deals with Taiwan?
Well, I think what we're seeing today with the evolution of the Ukraine war and the fact that Ukraine is not going to get Eastern Ukraine back, and no matter how much sanctions we have put on Russia, Russia is going to get away with it. I think that reality itself has already been sending a lot of signals to China. And when they think about Taiwan, well, what would be the consequences? Yes, it will be a very costly war. It will involve a lot of casualties and a lot of financial trade costs, economic costs. But is China going to get away with it in the end? If it is taking the lessons from the Ukraine playbook, yes, it will.
Just before we let you go, we were talking about Wang Yi, and he's been sort of around for longer than perhaps expected. We are not expecting any personnel announcements this week. Do you think he'll stay in place? And when do we expect a little bit more transparency on what that foreign ministry might look like on a permanent basis?
There have been so many rumors and speculations, right? We're going to find out when they're ready to tell us. But I think the general direction is leading to a conclusion that Wang Yi will have to step down by the end of this term. He's already 71. He will be 75, 74, 75 by the time that this current administration, this current term of the Chinese government completes, which means that he will have to retire. And it also means that the Chinese government has to start cultivating his successor. And when we look at the succession plan, it's usually the junior. So in the Chinese system, there is the director of the Foreign Affairs Commission, which is a more senior figure. And then we're also going to have the foreign minister and state counselor. Those two positions have been basically conferred to only one person. The foreign minister is going to carry the role of state counselor. So the Chinese in the past have established a pattern that there is a senior person and a junior person. But now we're seeing Wang Yi carrying both roles, the senior person and the junior person, which means that this is not necessarily sustainable. They will have to find and announce a successor of Wang Yi relatively soon.
He's a steady hand, right, clearly, which is why he's back in this role. Yoon Sun, who's a senior fellow at the Stimson Center, really great to have you with us. Let's take a quick look at Japanese bonds. We have seen that move when it comes to JGBs, again, building expectations of the Bank of Japan normalization of policy. That 2-year bond yield rises to 0.2% for the first time since 2011. We're also seeing the yen being maintained near its 1-month high against the dollar. We are just seeing this sort of building hopes, I guess, by parts of the market that the Bank of Japan will end what is the world's last sub-zero interest rate as early as this month. We're awaiting those bond purchase programs as being in particular focus there as well. But the rally in the yen is an interesting one because we've left that technical of the Ichimoku cloud close to confirming what is a bullish breakout for the yen. Perhaps we already know that given how much it's been trading at the moment, but the confirmation, I guess, is coming that the momentum has really shifted. Potentially, we clear that way for it to rally into that 145 per dollar area, Paul. A lot of that depends on, of course, what happens with the US dollar, and we know that we've got a lot of US political news to get through. Yeah, we're tracking a few geopolitical stories today on the terminal. The US Congress moving closer to forcing TikTok's Chinese parent ByteDance to sell the social media platform over national security concerns. The House Energy and Commerce Committee voted unanimously to advance a bill blocking app stores and internet service providers from offering TikTok. The company's calling on US users to protest directly to their lawmakers.
President Biden plans to direct the US military to establish a temporary port on the Gaza coast to ramp up the delivery of aid and ease the humanitarian crisis in the territory. Senior administration officials say the president will announce the steps in his State of the Union address, which is happening in less than an hour now. We're told the port's going to take weeks to build and involve US military personnel on ships offshore, but not on the ground in Gaza. Sweden has officially become the 32nd member of NATO after completing the alliance's historic enlargement into the Nordic region. The Swedish flag will be raised on Monday over the organisation's headquarters in Brussels. Sweden's addition comes 21 months after it bid for membership following Russia's invasion of Ukraine. The hold-up was due to objections from both Turkey and Hungary. Bloomberg has learned that Kristalina Georgieva is poised to secure sufficient support for a second 5-year term as IMF Managing Director. She needs the backing of major European nations and the US to ensure the success of any potential bid. Sources say Georgieva's pursuit of a second term would come with the understanding that she has the support of France and Germany. We have plenty more to come on Daybreak Asia. This is Bloomberg. More businesses are using generative AI products to help screen and rank candidates for jobs. But a Bloomberg analysis has found that the best known generative AI tool, ChatGPT, systematically produces biases that disadvantage groups based on their names. For more on today's Big Take, let's bring in technology reporter Davy Alba. So, Davy, can you tell us what the inspiration for this story was?
Yeah, definitely. So, ever since the advent of ChatGPT in late 2022, there's been so much excitement for generative AI, which is artificial intelligence software that can create new text, images, or even video based on what you ask for. But there's also been a long-held and significant concern for these tools, bias. And at the same time, there's been a long tradition from companies to rely on automated screening systems to help hiring managers vet job candidates. We wanted to combine those two ideas to ask the question, is there a risk for racial bias if generative AI were to be used in hiring and recruiting for jobs?
How did you conduct this analysis?
So what we did was conduct an experiment. We came up with a list of demographically distinct names using public records. Then we fed GPT a set of 8 resumes with those demographically distinct names, asking it to rank candidates for a few different job openings. And then each time we asked GPT who the best candidate was for the job using these demographically distinct names associated with being either male or female and either Black, white, Asian, or Hispanic. Each candidate had an equal chance of being ranked as the top candidate. Then we did this 1,000 times for each job that we tested for. And we came up with some very interesting findings that GPT did indeed display racial bias against candidates based on their names.
Okay, so in the category of news you can use, what should we be telling expectant parents here? What were some of your findings in terms of names to avoid or maybe employ?
Yeah, we found that resumes with names statistically associated with Black Americans were rarely ranked as a top candidate for financial analyst and software engineering roles. We also found that GPT seldom ranked names associated with men as the top candidates for HR and retail positions, which have been historically dominated by women. So those findings show that GPT badly stereotypes and that it actually fails adverse impact benchmarks for several groups across the tests. So that means if a company made hiring decisions based solely on GPT's rankings, U.S. federal agencies would find that this automated system was biased against protected groups and treated them unfairly. So for me, the big takeaway here is that using generative AI for recruiting and hiring poses a serious risk of automated discrimination at scale, and companies should really think twice before using generative AI in hiring.
Bloomberg technology reporter David Alba in New York with that big take. Definitely worth a read. Well, board diversity across global financial hubs is in the spotlight this International Women's Day. In Hong Kong, 1 in 5 listed companies still has male directors only. That's despite the City Stock Exchange aiming to end all male boards this year. Let's bring in our global business reporter, Jin Shan-Hong. So, frustration at the lack of progress despite this mandate. And I do wonder, is this a case of not enough eligible candidates, or is there cultural resistance at some of these companies?
Yeah, exactly. We are seeing nearly 500 listed firms in Hong Kong are not yet compliant with this rule of removing single-gender boards by end of this year. So now we are only about 9 months to the deadline. And when we approached the Hong Kong Exchange, they couldn't give us an exact answer of what will happen if companies just don't do it. So now the question is really whether these hundreds of companies can catch the deadline and what's the incentive for them to actually do so. So when we rank the companies by their market capitalization, we find out that the top 10 companies having all-male boards right now, 9 of them are Chinese state-owned companies or they're affiliated companies. So with that, we are also seeing this perhaps a power struggle with these big companies with a state background in China. Are they really willing to take a chance and make a change, or would they stay on and cling on to these all-male boards because the company's diversity within the firms as well as external candidate pools are already biased towards men?
Have we seen any improvements over the past few years?
Yeah, actually, if we are looking at the improvement, we definitely need to acknowledge that as well. Back in 2020, the number of female directors, like all-male boards, was still like 32%, but right now it's fallen to below 20%. However, that's still a big gap when we are talking about comparing to global financial hubs like London and New York. So what Hong Kong Exchange is putting ahead is really not a big ask. When we talk to analysts looking at board diversity and corporate governance, they are really trying to see whether the exchange is willing to really give a definite answer by the end of this year.
All right, global business reporter Jin Shan-Hong there. More ahead on Daybreak Asia. This is Bloomberg.
Well, Hong Kong has published a draft of its new security law, kicking off a fast-tracked process to complete legislation. The proposal is set to be introduced to the Legislative Council in the next couple of hours. Let's bring back our China economy editor, Jill Dacis, who has more from Hong Kong. So what do we know about this draft and the significance?
So, Heidi, right now we're actually still going through this draft. It was just published very shortly ago. So, I think we want to be a bit careful with, as we continue to go through the legislation, what it ultimately lays out in this draft proposal. Of course, as you said, it's going to go before the legislature at 11 a.m. Hong Kong time, so just a couple of hours from now. So far, it looks like this security law draft includes the potential for anything to be defended in the public interest. So there's a public interest defense that's sort of written into this draft. That being said, there's additional details in here talking about how, violations of this Article 23 proposal could carry a maximum penalty of potentially life in prison, depending on the severity of the offense. Just to kind of back up a little bit, Heidi, so a reminder to our viewers, this is a fast-tracked piece of legislation that's really, it was exposed to about a month's worth of public, consultation. The government of Hong Kong is actually required under some of its basic law constitutions from quite a bit ago that it has to create some kind of a national security law. But I think, obviously, especially over the last few years with the imposition of that Beijing national security law a few years ago, there's a lot of concerns about what exactly this ultimately means, what it means for free speech and chilling effects and that kind of thing in the city. So there's a lot that we still need to ultimately sort of unpack here. But yes, I think we'll have more details for you within the next couple of hours as this develops today.
Yeah, Article 23, as you mentioned there, does relate to free speech. What has the public reaction been? What are the concerns about this?
So at this point, I think that the public consultation period, as we saw, it lasted about a month. There were some initial concerns that might not have been a long enough period. It does seem like the government got quite a lot of public, sort of consultation and opinion. They published some details earlier this week, kind of exploring different, ideas that the public had for how this could go down. I'd also say, there was a briefing yesterday from John Lee talking about this, saying a bit about how, some within the public were actually concerned about whether they needed it. Obviously, as we've discussed, the city feels they need to sort of expand and protect interests of national security. I think at this point, we've been talking to some people who say the big concern here is whether there would be, again, that chilling effect, that idea that this is a global financial center. This is a major financial center within Asia that attracts a lot of, international businesses. As I think with that Beijing law a couple of years ago, there is that concern about what the implications of this ultimately are for free speech in the city, that sort of, free and, sort of commerce. So again, I think that we just kind of want to take some time to go through exactly what this law is telling us, and then we'll see, I think later today, what the ultimate implications are here.
Our China economy editor Joe Daces there with the latest. Take a look at how markets are trading at the moment, particularly when it comes to the future session. US futures are looking pretty flat at the moment. Fair to see a little bit of caution. Of course, we have some key jobs numbers coming in the Friday session. We're also coming into, in the next hour or so, President Biden's State of the Union address. We are seeing that Asian stock rally play through pretty nicely in this Friday session, though that is setting up for a bit of upside when it comes to trading in Taiwan. TAIEX futures popping by 1.5% there. We're also seeing positivity for A50 China futures. They're about 0.4% higher, looking to follow along with this equity rally that we see really gaining across Australia, as well as futures in Hong Kong looking positive there as well. The broader MSCI Asia Pacific is up by just about 0.5%. That is just about it for Daybreak Asia. Our markets coverage continues. We look ahead to the start of trading in Hong Kong, Shanghai and Shenzhen. Do stay with us. The China Show is next. This is Bloomberg.